Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me on the phone, we have Bob Yawger. He is the senior energy analyst at Mizuho Americas with an update on what's going on in the crude complex and related energy stocks. Bob, it's great to have you with us as always, particularly in this unprecedented time that we're living through right now. And crude oil, it seems for the unforeseeable future, it's going to have a hard time getting out of its own way.
Yeah, it's a very negative situation. There's a lot of moving pieces coming at once, and they're all just really leaning on crude oil hard here. You have gasoline issues. You have the OPEC Plus issue. It's just demand has just evaporated. Supply has exploded. We're getting hit from both sides of the equation, the supply-demand equation here, and prices are sliding accordingly.
Yeah, and it doesn't even have to do as much with people traveling less, but the entire airline industry seems like it's going to be out for some time with travel bans.
Yes, that's a huge issue. And you could really make the argument that Wednesday night when President Trump announced the travel ban to Europe, that was a big issue. That just slaughtered jet fuel demand. And, the corresponding fear in the market did not help matters. So you take jet fuel out of the market, you start to shut down business and people stay home. You got trucking, you have airlines, you have cruise lines, you have shipping. All these issues, they all burn some type of petroleum product. And that product is the demand for it is sliding so fast. We've become so accustomed to OPEC issues and stores report on the week. But at the end of the day, we've never really had something quite like this, in my opinion. You have demand that's just not there because of the virus, because people have just shut themselves into their houses. And it's just, I think that, in my opinion, that the energy is just such a good sign of how bad things are. If you're going to go out and buy, let's say something totally unrelated, you were going to go out and buy Netflix right now, you would be like, you know what? I don't know, man. Despite the fact people are going to be home watching television, this market, crude oil, is just taking the rest of the broader market with it, and it has it locked into this downward spiral that it may not recover from in the next couple of weeks. Buying anything, maybe you have to go through this prism or this filter of the energy markets, and I don't see the energy market getting any better in the next couple of days here. We have some serious issues that are not just going to go away anytime soon.
Right. And you're also seeing something with pricing that has not been around since 2009. That's over 11 years. And this could actually increase U.S. storage, which is the last thing the oil complex needs at this point. Tell us more about that.
Yes, this is a very negative price indicator here. For the first time since 2009, a very liquid contract or arbitrage spread opportunity that trades in the energy markets called the gasoline crack. When you send a barrel of crude oil through the refinery and it comes out the other end, that gasoline is always a premium to the price of the crude oil that went through in the first place because it's been processed. It would be like making a cake and it's not worth as much as the flour that went into making it or in the butter. It comes out the other end, it comes out of the oven at a premium because there was a lot of work put into that. This is kind of the same thing, except now the crude oil for a time today was worth more than the gasoline. The flour and the butter would be worth more than the cake that came out of the oven. It's just the refiners have to decide, what are we going to do? Why do we even send the crude through in the first place if we're going to lose money on every barrel that goes through the refinery? Well, especially for gasoline, which is usually 2/3 of the product that comes out the other end. So that is a very negative situation. Like I said before, we've gotten used to geopolitics. We've become used to supply side issues driving the crude oil market, and it's always OPEC this, Iraq and Iran that. This has nothing to do with any of that. This is the worst possible scenario. This is price of gasoline. This is just you going out to drive. The price of gasoline today, the commodity, it traded below 75 cents today. We're still paying over $2 at the pump. This thing is way lower than prices at the pump. The pump is going to slide big time between now and then. Now, I realize there's local taxes and things along these lines, but the commodity that's trading on NYMEX today is trading 75 cents. That is just an incredible number. Gasoline was the worst performing financial instrument on Wall Street last week. The Wall Street Journal 72 winners and losers, gasoline was dead last, down about 35%. Crude oil was down was no star by any stretch of the imagination, but was down only about 27%. And the S&P 500 energy sector was right in there between them. But gasoline is getting creamed, and it's really surprising too for another reason, because this is turnaround season. This is when refiners actually start to make a pretty lot of gasoline. They ramp up the process because they want to start to get ahead of summer driving season. And that's another one of these decisions these folks have to make, the refineries folks. Do they want to ramp it up and roll the dice if this is going to go away in 2 weeks? Or are they going to they're going to do that and it doesn't pan out that way? And they just have to keep stuffing crude oil in the storage and gasoline in the storage. And it just becomes, it's already become a vicious cycle.
So Bob, to wrap up here, that scenario does sound rather negative. Which stocks survive? Which companies are going to be able to make it through? Because some of the smaller ones, the outliers, are heavily levered. And I don't think many have modeled in just what this looks like.
Yes, I would tend to think that as far as E&P as relates to crude oil is concerned, in my opinion, Pioneer has always been a good pick. Their debt level is relatively limited and has always been attractive. They got a good balance sheet. There's always talk that somebody wants to pick them off for a quality addition to their roster. It would take a pretty good. It's obviously beaten down, but so would the parent at this point, or the hunter at this point. But it's a good name, relatively speaking, to everybody else, in my opinion. ConocoPhillips is a kind of a major. They do. You're never going to see them at the bottom of the day. At the bottom of the pile, it rarely happens for them. They're always in the middle of the pack to the upside. They always do quite well. And as far as refiners are concerned, in light of the fact that I just kind of blew them up a little bit, HollyFrontier tends to do good because they're a mid-continent refiner. They have certain demand issues that are a little bit better than some of the other three that are in the S&P 500. So yes, HollyFrontier as a mid-continent refiner, they're doing pretty good. They're down 3% today, while a couple of the other S&P 500 energy refiners are down 15, 16, 17%. So it's a matter of scale here. Nobody's ripping to the upside. So that's not in the cards. But I will say one thing, and it's not really, it's just an interesting sidebar here, but Cabot Oil and Gas, it's really a natural gas company, but they do have oil in their name. It was the best performing name in the S&P 500 last week. And it was really a function of their natural gas production. But yes, Cabot Oil and Gas has been doing pretty good and will continue to do pretty good as long as natural gas doesn't slide off the face of the earth, which it has threatened to do as of late. So you got to be careful there.
All right, Bob. Great to speak with you as always. Thanks so much for joining us.
You have a good day, Jill. Thanks for having me.
Thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.